Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for a long awaited update on Bitcoin. Sorry I've kept you guys on YouTube waiting so long. You may notice my voice is a little scratchy or a little off today. Unfortunately I'm suffering another bout of hay fever, although I am generally doing better than I have been for a lot of these last 2 months. June and July, always a bit of a headache for me. I do treat it as best I can, and I have tried to manage the causes as well as the symptoms, but it's just one of those things I have to put up with, and unfortunately it interferes with my work occasionally. You'll also notice there's a bit of background noise today. I apologise for that, but it's a case of put up or shut up, because it's 30 degrees in the shade outside and I need the fan on in the office, so if I'm going to get on with any work in here at all, I need to be at least, only part boiled. So, right then. Now that the complaints are over with and the gripes and the bitching's over with, shall we get on with looking at Bitcoin? Right then, so first thing I want to do is we've got our Elliott wave counts, and we're going to come in on a smaller time frame later, and we're going to dig through this recent low because it's an absolute bitch on the small time frame. Right, I've got a bullish count on it, which is almost unbelievable that it's even possible. I have serious doubts that it is. And I have a bearish count, which is equally fucking ugly. Pardon my language. Sorry to YouTube algorithm to be swearing so early. I'll try and keep the F-bombs to a minimum from this point, but seriously, it's a pig. Which is very unfortunate, because here on the large time frame, it looks really quite pretty. Right? If you're not familiar with my long-term count, go back and watch my video on the BLX, and this will make sense to you what we're seeing here. But it really does resemble a zigzag, doesn't it? It looks like a zigzag, and I would say it counted like one, but unfortunately when we get into the lower time frames it really is a bit of a mess. So that's going to be the Elliott wave portion of the video. I do have an alternate as well, so if we were to just quickly look at that, where I subdivide this into a double zigzag, where the Y wave of the larger intermediate Y wave, so larger intermediate Y wave, is comprised of a double zigzag itself. Now that's a big no-no for some people. I happen to be a bit more flexible of that issue, saying that a WXY as a double zigzag can be comprised of zigzag patterns, which include single, double and triple zigzags, but that's an Elliott wave community debate that I think is going to go on for some time. So let's start with some basic analysis, some classic analysis first instead. Now I've already got the volume up at the bottom here, and I've got the volume profile on the right hand side, fixed range volume profile, and I just want to bring up some supports, and I want to bring up these. Now why is that not sitting on the label? Should be sitting over it. Bear with me. Okay. Right then, so we've got a bunch of supports here, and I'll just bring up these little demand windows here as well. We've got light and heavy demand zone. I've labelled these, they're both just technically demand zones, but I'm expecting there to be a significantly greater amount of demand down here than where we are currently. So before we get into the Elliott wave count, which long term is very bullish, let's just consider where we might end up if we were to continue to sell off. Now, how far we can go from here and how quickly, I think, is up for debate, because the RSI tells us that we are the most oversold recently than we have ever been on the weekly time frame in the history of the BLX, reaching 19.35. Now we can see how previous market bottoms of major cycles have come around this level. We're back at that level now, so we've done plenty in terms of selling off. It just doesn't quite look complete yet. So putting our bearish hats on for the moment in classical analysis, let's consider how much lower we can go. So, whole bunch of supports, the strongest of which I would argue is around between 10 and 12,000. That area is extremely strong support. Levels which have been tested as resistance here and back tested here as support, tested here as resistance, tested here as resistance, used as support here, tested here as resistance. This is a level which is extremely, which has been interacted with multiple times. There are buyers down here. Okay, there is a lot of market acceptance in this region, making it a strong demand zone we've got down here. We've also got previous highs here at 13.831 spot 41, and we've got other highs here. Okay, this is resistance. Now I know I've labelled them all as support, but technically they were resistance. They haven't been proven as support yet. They're just potential support. Okay, and we got a level there at 11.902 spot 21. So this whole area highly likely to provide support. Highly likely, I would argue. Now also down here we've got our 50 and 61.8%. The golden ratios down here right on this 10 grand support. It comes in at 10.235 spot 78. Okay, so if we come back on log scale, if we come back to the golden ratio around this support, this resistance, this resistance, this resistance, this support, this resistance, all this market acceptance and the golden ratio, I don't care how we get here, but if we come here, I'm buying it. Right, this is another an incredible accumulation zone in my opinion, if we're lucky enough to get down here. Now how we get down here, that's the Elliott wave side of things, right? I've currently got this as a single zigzag. I've got it as either complete or more likely, I think, not complete, with a little bit further to come. Okay, and then we'll be off in a free. But if we are destined, I'm saying, on the longer term to come down to these levels, and I think we're probably more likely going to do it as a larger move. It must take a bit longer. Now I could be wrong, and we could just get a big red collapse, a capitulation like this or like this. We've seen them before, right? It's just I don't think there's much room in the RSI to do that now, but it could happen. Okay, so if that were to happen, I'm going to be a buyer down here, and the second I see 5 up and 3 back, right, I'm going to be adding like everything I can get my hands on, basically, once I see an impulsive move. So we could almost be done, but if we do come lower, these are the levels I'm looking at. So I showed you the 61.8 and the 50, but now let's take a linear fib. So this is a fib adjusted for the linear chart, even though we're on log in the weekly time frame. So I'm just going to switch off the log fib for a moment, and I'm going to put on this linear fib. 10.345 spot 69. That's an 89% retracement. Right? 89% retracement overall of this move up. Now that happens to overlap absolutely perfectly with the golden ratio. 90% sell-off at the golden ratio at major support in this volume profile, right? That's a buy all day. Okay, so there's another little piece of confluence. So we've got linear levels down here, Fibonacci retracements, we've got log-based Fibonacci retracements, we've got strong previous supports down here, we've got heavy demand down here, we've got everything we need to find a low around between 10 grand and 12 grand if we come down much lower. So I've mentioned the RSI being extremely oversold. That's what makes me a little suspicious that we can't thrust down here so quickly. Okay, so that's support and resistance covered. So now let's just bring up our count again that we're expecting to see here. Right? We're either done with the C or we've got further to go, right? Depending on how we subdivide this. So let's just work on the premise of a one-to-one relationship between the A and the C now. It tends towards parity, it doesn't always result in parity, right? It just tends towards it. You can have extended A's, you can have extended C's, they can be quite common. I can just get this to place in the right place. So now let's just zoom in, get this placed properly. Okay, that's okay, it's just this one. Okay, so we can see here that in log scale, we've already gone beyond one-to-one with the C. C is a longer wave. Okay, now if we come into linear, we can see that our target is down here at 12.276 spot 42. So if we are correcting in a linear progression here, then that's going to bring us right into all those support levels we spoke about, right into that demand zone as well. So maybe a very fast and violent correction could be on the cards to get this over with. Okay, so there's your ABC one-to-one relationship. Doesn't have to come that low, it could be already done. Okay, let's come back into log. I think there's one other count we need to discuss before we go into the detail of them. We've spoken about this one being the one we're expecting. This is the alternate version of it, where we have a WXY, but then we have our second alternate, which is an old count now, so we're going to need to discuss invalidation levels before we move on. So second alternate is this. This is an old one, and this was the old alternate after the triangular count broke down. 1, 2, 3 throws over the channel, quite typical for a 3, and then we get a flat for a W, and then we get a zigzag for an X. So a flat zigzag combination. W, X, Y. Now we know that we've currently retraced, when we look at our log fibs, right into the territory of a wave 4, which is 38.2%. Okay, so this count is still alive. It's not completely dead. I just think it's far less likely given my longer term analysis. Like I said, if you haven't seen the BLX video, I spent the time to really go through that and convince myself of what I saw, but I'm not going to abandon this. You should never abandon an idea that's still valid. Just make it a second alternate, make it a tertiary alternate, whatever you want to do. You know, but either way, our invalidation point is here, 13.831 spot 42. Break this channel now, break this level, and we can delete this thing and get rid of it. But if this is correct, a move back to the top of the channel, that's possible. Okay, now this is nowhere near as bullish as my primary count, admittedly, but it would still be pretty nice, wouldn't it, to get up there. So on that note, we've discussed our wave 4 invalidation point for our alternate count. So what I think I should really do now is I should just take those and I should put them into that second alternate count, so they're in the right place. There we go. And then we've got our wave 2 invalidation point, which is all the way back at 3148 spot 33. That's the primary invalidation point for this count. We have to come all the way back and take out the 2018 December lows. I don't think that's going to happen. Personal opinion. I think there's too much support down here. We're going to come into this area and we're going to bounce. Okay, that's what I believe is going to happen. So let's just have a quick look at our indicators on the weekly time frame and our moving averages before we move on and really dig into the Elliott wave count. Now don't worry, I will timestamp these videos. So let's have a look at the RSI, the MACD and the unbalanced volume on the weekly. As previously discussed, the RSI is at all-time lows, having just bounced from them. We reached 19.35. Another violent sell-off could make an even lower low in the RSI. We will be looking for bullish divergence at the lows, because it's possible that all we need to do is a 3 and a 4 and a little move in a 5th. Just a little bit deeper, and that could create bullish divergence. For MACD, we can see how gradually, although you could argue the same during the correction obviously as a prerequisite to going lower with the bullish decline in bullish activity, we can see how over time, gradually, we're seeing the bearishness momentum start to slack off. We've got, all of these go through phases where you go up for a while, you peak and you come down, down for a while, peak and come up. Just like we did here, just like we did here, and we may have done that now. We may have put in the worst we're going to see. Now that doesn't mean that we're not still going to have bearish momentum for a while, which could lead us lower. It just means that the worst is over, but we've got a long way to go before we cross the signal over the average and we've got a long way to go to the zero bound before we start recording positive momentum again. It would have to take a pretty violent turn of events to the upside to do that. Capitulation move could be the catalyst for it. Alright, now let's switch that off for a moment. On balance volume, it's just confirming price action at the moment. We're corrective on the weekly time frame. If we come to the daily, we can see it's actually very bearish. You know, we've got on the daily time frame, we've got trending lower, series of lower lows and lower highs. If we compare this to the recent price action, right, we've got a low, a high, a higher low, and a higher high. We've got the opposite in the unbalanced volume. This is like an underlying bearish divergence here. No sign of accumulation at these lows. That's not very reassuring for these current lows. A move back into neutral territory on the RSI, also not very impressive, getting off of the lows. And not even above the zero bound on the MACD yet either, so no real impulsive sign of life. So volume at these lows, yes, but we often put in a capitulation move with the volume and then drift to a lower low on lower volume. That's possible, and we'll be keeping an eye on that as well. Right, moving averages on the daily time frame, we're well below the 60 and below the 250 now. We don't really need to pay any attention to the 10 and the 20 at the moment. On the weekly time frame, we're back through the 250 exponential moving average. We've broken it before with a wick here and with bodies of candles here. It has coincided around market lows before, but this time we are looking particularly bearish in terms of having broken through it here. I've also just included a new moving average. Now, you know, don't jump down my throat to ask me about it, because it's literally a brand new idea that I've had, and I had no idea whether or not it's going to really work out. But all I've done is I've put a 1460 simple on here, which is 1460 day moving average. Why have I done that, you might ask? Well, everyone goes on about 4-year cycles in Bitcoin. Now, I'm not necessarily a believer in such things, but let's just say that there is such a thing as a 4-year cycle. Perhaps we should have a moving average which represents it. So that's what we've got here, 1460. Right, now as we can see, it's coming roughly at the lows before. We've pierced it before. We're currently trading right around it, having bumped into it a couple of times and been rejected. And we can see how we've broken through it at previous cycle lows as well. So I'm not saying it's a auto include on your chart. I've only just started using it myself, but I'm going to leave it up for a few weeks, maybe even a few years into the future, and see how things progress from here. Okay, so we've covered our indicators, we've covered our, you know, Fibonacci retracements, our support. I think we've done all the classical TA we need to do at the moment. So looking at the shorter term, what have we had? Now, I put out a post on the Discord last week saying what I'd be wanting to see. So a bearish move, you know, I see on the smaller time frame here, local resistance, right, around these highs. It looks corrective, like a zigzag. We've gone from point to point to point to point in this regression channel. We've been rejected at the edge of it. We didn't even come back up to test this supply zone here around this volume. So super simple. I'm saying it looks corrective in the short term. I lean bearishly. Now, what would I need to see to be bullish? That's the question. So, regardless of whether it comes out of the low now or whether it comes out of the low later, I need to see a 5-wave move up. 1, 2, 3, 4, and 5. 5 clear waves up into prior resistance, into this supply zone, and then I'd want to see 3 waves back. Okay. Now, I don't know how long that would take, but if it were to happen from this low, I would be a buyer of that retracement. Big time slightly. That's a higher low after breaking a downward trend with an impulsive move to the upside. That's a buy signal all day. So we'd be looking for that if we were to get it. Now, there's no sign of it yet, but if that were to form, that's what we'd be wanting to see if we wanted to buy. Now, it's unlikely to come from here, but with another thrust down to the edge of the channel perhaps. I mean, let's just have a quick look how that lines up with our supports. Right, here's at 1381. Let's just bring the rest of the chart into view for a moment on the weekly, shall we? Going to lose sight of that regression channel a little bit, I think, here, but we can at least see our supports. So, edge of the regression channel, if we were to come straight down, would bring us to 1388, 13.8, 3.1, spot 4.1. But obviously, we can extend this in time. And we don't have to come down in one go, do we? We can work our way down. You know? Get down to these lower supports. Still stay in this bearish channel if we're not complete. If we've still got that fifth move to come down, maybe we come down more like that. Right, head for the median line perhaps. Try and get a median line touch. Either way, you take my point. It doesn't look particularly convincing at the moment. Right, now on that note, let's wrap up the classical analysis here now. I don't think we need to do anything else. I could spend some time looking at pitchforks and stuff, but honestly, we'll do that next week because there's lots of them and there's lots to go through. And I really don't want to get distracted by going through all of these different pitchforks and stuff. What we'll do is we'll discuss them I'll discuss them with my patrons on the live stream this week because they want me to dig through the whole count anyway, so opportunity to do that. Let's come into the actual Elliott wave counts then now, shall we? Okay. Let's go out to the daytime frame first, figure out where the hell we are. Primary count. It's an A, B, C. We have a couple of ways of doing it. Right. Obviously you can't see all the small time stuff on the daytime frame at the moment. But that's how we get ABC complete, and then this would have to be a bullish low, which is not particularly looking very convincing of at the moment, but it could be. Alright, and then we also have a way to carry on the C lower. Right, so the C would be down here. Okay. A, B, C, like that. And we're in a wave 4, and we've got 5 more ways to come down to lead us lower. So let's look at... Let's get this bullish one out of the way first. Bullish low here. The idea that the low's in, not particularly believable. Come down to the smaller time frame for a minute now. I know the chart's busy as all hell at this level. I really don't think we have to dig through the whole thing. I think what really matters at the moment is this short-term correct, what looks corrective, right? So what we need to know is, can we get a bullish count off of a low? We can, but warning, it may hurt your eyes. You know. Excuse me. Like I said, allergies. It might hurt your eyes. Either way, I can get the count to conclude 3, 4, 1, 2, 3, 4, 5. I can get it to conclude down here. But can I get an impulse? Can I get any kind of bullish move off of the low? You may ask. Well, that's what I'm looking at here. Let's come down to the 1 hour. Actually, no, let's come down to the 15 minute. That's what it's going to take to dig through this. So, bullish interpretation, a monstrosity, which I know some of you are going to probably vomit over. 5 waves into a 1, double zigzag into a 2, sharp correction. 1, 2, 3, 4, 5 into minuet 3, A, B, C, running flat into 4, sideways correction, alternation with 2. 1, 2, 3, 4, 5 into minuet 5 into minuet 1. So, yes, it's possible to get an impulse off of a low. Okay, 5 waves with no overlap in the 4. That's possible. Now let's take a look at the wave relationships here. So the 1 projected from the 2. We fall short of the 618 for the 3, but it's not the shortest. So the wave 3 is legal. It's longer than the 1 and it's longer than the 5. Just doesn't quite come to target. Now does it reach the 123.6? It goes above the 123.6 and the 131.8. So somewhere between the 131.8 and the 1618. Flat takes us into the 4, and it's a running flat. rarer structure, but not rare per se, just less common. And then a 1, 2, 3, 4, 5 into the 5. Now how does the 5 relate to the 1 from the 4? We get almost a 1-to-1. So we could say off of the low that this is a believable impulse, and I think if we move it to one side we can agree that it is. It's not perfect, you know, maybe a slightly less aggressive one, something a bit more like that would be more convincing, but it is what it is, right? It's 5 waves, looks like it could be 5 waves. Okay, so now things get really ugly, okay, because now we can't conclude the count where we would like to, which would be a 3-wave move to here, and then we could go 1, well not backwards in time obviously, 1, 2, 1, 2, 3, 4, 5, 1, 3, 4, 5, so on and so forth, and you know, work our way up the chart. Didn't happen like that. What we've ended up with instead is a compromised nightmare structure. So 3-wave move WXY into an A. I then have this as a double zigzag, 1 here and 1 here, joined by a flat X wave here with a little 5-wave C move here. So we get a B wave here, also a WXY. So double zigzag for a start, so no alternation between correctly wave A and correctly wave B. And then we come down an expanding ending diagonal. A, B, C, 1. Sorry, I need to move that to one side, excuse me. To here. And then A, B, C, 2. A, B, C, 3. Sorry, that should be down here as well. Quick A, B, C, 4. A, B, C, 5. Alright. So, yes, I know what you're saying. It's ugly as hell. The 4 does seem to subdivide as a 2. Does seem to subdivide as 3 waves, excuse me. I'm getting some verbal diarrhea today, I'm sorry guys. A, B, C does subdivide as a 3. The 3 is longer than the 1, the 4 is deeper than the 2, but the 5th truncates in a truly horrible fashion. It is not longer than the 3, it does not come anywhere near the 1-3 trend line. It truncates, and that's what we call it when it simply doesn't fit the rules. It hasn't reached its destination, it has truncated. Now we get 5 waves out of here. Okay, now this is a sub-minute, so this would be minuscule. We get 5 waves down here for an A, 3 waves into a B, and then I have to switch into line chart here to make this even remotely plausible, an ending diagonal for a C. Okay, contracting ending diagonal. The 2 is deeper than the 4, the 3 is shorter than the 1, the 5 is shorter than the 3. But my god, is it ugly. And when you look at it in candle with this stupid wick here, it's not even usable. Right, so take it with a pinch of salt, guys. It's the best I can do. Subdivision inside of this wave though looks neat, okay, and the subdivision inside of this looks neat as well. Right. Candle or no. From there we get an ABC to complete the larger minuet B. So there you go. A to here, B to here, C to here. Now does it look like a zigzag? Yeah. Very horizontal B, but it's a triangle, and it's a running triangle. Now the B finishes before where the A began. The E finishes, sorry, before where the A began. Therefore the B finishes there than where the A completed. So it is legal, it's not levitating above it. We come up in 5, 1, 2, 3, 4, 5 into an A. Then we go A, B, C, D, E for a running triangle, completing a B wave, and then we get an impulse out of here. 1, 2, 3, 4, 5 into the C, into the B. Hunky dory. So the whole thing's shaping up to be a big flat. A, B, C, A, B, C, B, expansive B. So now here comes the C. We get 1 WXY 2 1 2 1 2 1 2 3 4 5 3 4 5 3 4 5 3 4 5 C2 done. Has to come in before this low down here. So let's just mark that, and we'll say invalidation point. So bit of a stretch, you can see, guys. Now I'm gonna say it. I'm not. I don't give it very high probability. I give a bearish count more probability, but the bearish count isn't much prettier in the middle. It just looks better as a structure. That's all I can say. No, for one thing I've noticed over the years, the lows in Bitcoin are flipping horrible. They are just ugly. Okay, and it could be a bullish low that's just ugly as sin. All right. So now let's bring up the idea that it's not done, that we didn't complete down here. Okay, that we're looking at a correction. So we've added a few bits and bobs here, haven't we? So we're going to put these into a bullish low folder. And we've got these as well. We're going to lock those in place before we move them. Put those into the bullish low. Should switch that off now, take away everything. There we go. We'll get rid of the lowest in count and we'll go for this first C wave counter primary. So we get down now into a 3. So all I've done is essentially I've lengthened. I've got 1 and 2 here at minute degree, but instead of 1 and 2 in the 5 and 3 and 4 here, I've added in an additional subwave to stretch the minuet wave down to where the minute wave 3 was in the prior count. So let me explain that. Let's just put the bullish low in. Sorry, low count low is in 3 and 4 here at minute degree, and in this count 3 and 4 here at minuet degree, stretching the 3 deeper. That's all I've done. So all we need to do now is look at the corrective idea. So you're not going to like me because I've got the same count with a mild difference, a subtle difference. We know that this is an impulse, arguably. So if it's not 1, it can be A. 5 and an A. We know this can subdivide, okay, as an absolutely horrific expanding ending diagonal for our A, B, C flat. Let's just take it. We measured the impulse, we didn't measure the flat. Now let's have a quick look. A from B to C. Right, we bottom at the 1618. Most typical target for an expanded flat. Boom. So that looks kind of like a flat. Yeah, it's filth. It's ugly. It's horrible. Maybe you should just subdivide this as a WXY. Maybe you can. But I've got an alternate count which does that for us. So I figured I might as well try it different here. You know. So what have I done? Well, in this case I've had to create an impulse where there's 3 waves. 1, 2, 3, 4, 5. Does not look very pretty, does it? 4, you might say, oh, wave 4 price action comes into wave 1 territory. Wave 4 price action does, right? But wave 4 completes beyond wave 1 price territory. So go and have a debate. Go and have a debate about orthodox tops and bottoms and their relationship with the validation or invalidation of Elliott wave counters. I'm undecided on that one. 4, in its completion, in its orthodox low, has not interfered with wave 1 in any way at all. Right? It has completed beyond wave 1, and therefore you could argue it's 5 waves. Looks like dog shit, doesn't it? Right? So easier to say ABC all day. I definitely agree with that. The move down, all of this which subdivided as a C in the flat, this now all of it subdivides as a 1. Then a 2, 3, 4, 5, much lower. And that's it. That's how we get lower. So now that we've looked at that, let's now have a look at the alternate count. Now I haven't fleshed this out. I have ran out of time. I can't make you guys wait any longer for a Bitcoin video update. People will start subbing from the channel, I think. Right, anyway. Excuse me, sniffing. So, alternate count. W, X, Y. What this does is allow us to have better wave relationships in this segment of the count. So rather than getting exceptionally large wave 4s and small wave 2s, we can now swing these as major pivots instead. So we can say A, B, C. That's one zigzag, right? The reason we get such a large move here is because that's an adjoining X wave, and then we get 5, 1, 2, 3, 4, 5, A, W, X, Y, B, and then we're going to get 5 down in a C for our second zigzag. This has the potential to push price lower a lot easier than the primary does. The only reason I'm holding on to it as an alternate as opposed to making it the primary, although I think I prefer the subwave structure, is because I've got a WXY within a WXY. And I'm not saying it's not allowed, I'm just not 100% comfortable with it. I think it's fair enough, but I'm just not 100% comfortable with it. We'll see how it breaks down from here, okay? If it breaks down from here and it looks better, we'll go with it. So here, I can now subdivide this as A, B, C into W. It's a bit of a stretch because it does look like more like an impulse, but I've gone for A, B, C, and I can make it subdivide just. This, I've gone for that same flat structure. I have no solution for this beyond that because of this heartbeat structure here, which gets in the way of interpreting everything else. So I can either say, well, can I? Okay, what if I did this instead then? What if I said, bear with me, W, and this is X, and this is Y. And then this, I don't know what I don't know what to do with. Okay, we could use my screwed up impulse for the C, and we could say this is a sudden 5-wave move. This is the B. Right, we can still get 535 in here, and then the C's here, and this is now 5 waves using my dodgy 5 waves. Or we could look at it as W. Bear with me. Brain melting. X. That doesn't feel right as an X, does it? So what if... Let me just have a think. W. Can I hit X, Y, X? No, I can't get away with that. X, Y. No, doesn't help. I'm just hurting myself. Right then, so the alternate is to just call this another WXY. Give ourselves some slack with how we interpret this central structure, which I don't have a solution for currently, but I can get this to subdivide as a zigzag, and I can get this to subdivide as a zigzag, so maybe it's there. Either way, this would still be the same impulsive move down that we've counted in the in this count for the bullish low, except it would all be into a 1 rather than into a C. Alright then, so I think we've covered everything with the Elliott wave count. It's not pretty, like I've said. What I will say to finish up today is, if you are struggling with the Elliott wave count sometimes in an asset, my personal philosophy is to go off and find something which looks easier to analyse. Go off and find something which looks easier to trade, and if Elliott wave's doing your head in and it's not adding value to your analysis, drop it for a while and go back to basic analysis. Now, on that note, I've just started a new series for my patrons called Classical Analysis, and I'm going to cover all of the classical analysis tools I use here on YouTube that you've seen, such as basic support and resistance, channeling, trends, candlestick patterns, volume profiling, indicators, blah blah blah. And that's going to be going on for many months now, because it takes me time to put these videos together. And so that'll be something you can access via signing up to the Patreon. So, to wrap things up, if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers, and if you're interested in becoming one, follow the link in the description box below, have a read of the tiers, and feel free to sign up. Also, if you're not following me on Twitter yet, there's a link to my Twitter page in the description below. I always post when I upload new videos. So, That's it, guys. That's all I've got for you. I'm still expecting it to be some kind of zigzag or double zigzag. I'm not convinced that the low is in yet. I feel like we've got further to come, and I've shown you the likely areas where I think we'll find support. So until next time, take care of yourselves, and I'll speak to you soon. All the best. Bye bye.